Do you hear anything in what the Fed has said that changes your view on inflation or the growth of the economy, the trajectory of the economy, or unemployment, or is it pretty much what you expected?
It's very much in line with expectations. What we hear is the committee really highlighting the ongoing weakness in the domestic economy, particularly when it comes to the labor market and on the part of the consumer, justifying not only their current very accommodative stance, but offering assurance to the market and investors that they intend to remain in this very accommodative stance for the foreseeable future until the economy emerges back towards pre-pandemic levels of full employment and stable inflation near 2%, which in the Fed's opinion could be several years from now. There's a lot of optimism in the marketplace, but the Fed says that to get to this sustainable organic pre-pandemic level, it could be quite some time. So the minutes really highlighting the emphasis that the Fed has voiced to the marketplace through several commentaries, through several testimonies, that they do intend to keep rates low until well into next year, if not beyond.
Let's turn the corner, Larry, and talk a little bit about the impact on equities. As I've been taught over the years, a little bit of inflation is pretty good for stock prices. Low interest rates, pretty damn good for stock prices. And a growing economy, very good for stock prices. All of those things are in place.
No, absolutely. And I think, you just outlined a couple. We put out 6 factors in our recent note of why this equity market should continue to go higher. And, one, we're in the first year of a bull market. Historically, it lasts 6 years. 2, as you mentioned, as long as interest rates remain below 2%, that tends to be a good market for equities. 3, as Lindsay said, we think the Fed stays on hold for 3 years. That should be positive. 4, if growth is likely to grow 4% or more this year, that should help the earnings environment. 5, if you look at the fiscal stimulus, if the rescue package gets passed, you're talking about $5 trillion being pumped into this economy. That's more than 25% of GDP since this pandemic has begun. And then 6, I think that we start to see a more normal activity in this economy because within 6 months, I think that this vaccination process will be well underway. Most of us will be vaccinated and we'll be returning back to normal.
Shepard Smith here. Thanks for watching CNBC on YouTube.